first of all, I want to ask you, you spent the last couple of days meeting with the proverbial masters of the universe. And
yeah.
I'm somewhat joking, but a lot of these guys are very smart and sophisticated, of course. What were the key kind of questions or concerns that came up? Like, what are people talking about?
Yeah, and a lot of them did have good years. So we're meeting with hedge fund managers, long-only managers. Long-onlys, they're having a good year. I didn't get smoked in the fourth quarter, so I made the right pivots. I was out of tech, I was out of industrials, I was out of energy, and then they bought housing. So that's what the long-onlys were talking about. So a lot of people are actually interested in the housing, like updating that theme, because a lot of people got long housing appropriately at lower prices and REITs. So that was the constructive component of it. A lot of people focused on China. Everybody's long the China catalyst. They maybe put a better way, everyone's living in fear of getting squeezed by a China catalyst. So as always is the case, institutions are living in fear of the upside, not protecting the downside. All right? Yeah, of course, some of these guys are now protecting the downside, but that's after losing a lot of money. And a lot of, like I said, not everyone has the same P&L. But again, it's amazing to go meeting to meeting for 2 straight days in New York, and after I got to get off, I only have 10 minutes left here. I got to go to back-to-back meetings, hedge funds here in Connecticut. People just live in fear of the upside. And that's what happens at the end of a bull market. People still look back and they say, wow, I'm going to miss buying this. And by the way, we do have credibility in this. We bought every damn dip for 2.5 years and did it with pride and actually liked expensive stocks more because they were expensive. Again, hair up on the back. How could you say such a thing?